Welcome back to the channel, guys. Today we've got some exciting NIO stock news that we need to cover. I know you guys have probably already come across this news. I am a little bit late to the party, but this is about the delivery figures. However, this video isn't just going to be me regurgitating what the delivery figures are. We're going to be talking about what this means for the company, what this means for the stock. We're going to be looking at some of the catalysts moving forward for NIO, and I'm also going to be finishing this video with a valuation on the company, projecting the revenues potentially for this company in 2025, and then looking at what the stock price might be in the years moving forward from here as well. So guys, do stick around. I think you're gonna like this one. So guys, let's not waste any time, let's get right into it. So we know that NIO absolutely smashed their December delivery figures. They delivered 7,007 vehicles in December 2020, which is an increase of 121% from the same time last year. Altogether in Q3 they delivered 17,353 vehicles, which is a 111% increase from the same quarter last year. And altogether for the year, NIO has delivered 43,728 vehicles, altogether a 112% increase, more than that actually from the same time last year. So altogether, really exciting stuff for NIO. They've absolutely smashed their delivery numbers. I think they've beaten what many people expected them to do, so the company is doing really well. Now the founder did have a little bit to say about this. He said 2020 has been a challenging year for the entire world. We know that with all of the Rona, the illness, the shutdowns, the lockdowns, but against this backdrop, NIO has achieved consecutive record highs along the way and closed the year on a high note with a remarkable December deliveries of more than 7,000 vehicles. So just to put it all in perspective, NIO's had this absolutely smashing year, and they've done it all during this crazy pandemic, while this illness has just been ravaging countries and businesses and companies. So gotta give really big props to NIO. They have definitely done a fabulous job this year. But what does all of this actually mean? Well, to me, what it means, and I did a similar video for this, you might have seen it yesterday for Li Auto. If not, I will link it up somewhere here. But what this means for the company is that they're actually gaining market share. That's the important thing to note from all of this incredible hype about these delivery figures, is that this company is gaining market share in the Chinese EV market. Now I say that because EV sales in China this year are actually up 8% from what they were last year. However, NIO sales are up 112% from the same time last year. So that means that this company is actually growing faster than the Chinese EV market, which means they're claiming market share from competitors and growing their own market share in this booming Chinese EV industry, which is really good news and really good bright signs for their future. So altogether this year, NIO actually claimed a 3.46% market share of this Chinese EV market. So as you can see here, altogether this year in China, there were around 1.3 million EVs that were actually sold in the country. Of that, NIO sold 43,728. So that's where we get the figure that NIO had a 3.3% market share in China this year. So they're competing against people like Li Auto, Tesla, BYD, a lot of companies in China in this EV space. But NIO has done a really good job growing faster than the EV market this year. And again, like I said, it means that they're gaining market share, which is really important to understand for us to be able to know that this company looks like it's on the right path and it's got a bright future ahead of it. Now, before we get into really looking at this market share issue and looking at how this affects the valuations and doing that valuation and price projection on the company, I want to talk about some of the future catalysts upcoming for NIO. So when you guys are investing in a stock, it's really important that you pay attention to catalysts, because what happened before is really irrelevant to a company's stock price. The only thing that matters is what's going to happen. The stock market, of course, as you know, is future looking. So what are some of the catalysts that are upcoming for this company? Well, we know we've got the very hyped, very looked forward to NIO Day. Investors are really looking forward to this day. Now on NIO Day, there's expected to be a plethora of announcements, and some of the ones that we're expecting, according to the founder, is obviously we've got the new sedan that's supposed to be unveiled. We've possibly got this 150 kilowatt hour battery that's going to be unveiled, and we've got updates to this automated driving system. So NIO is expected to unveil its NT 2.0 system, which might also possibly have LiDAR attached to it as well. So all of these are possibly very exciting announcements upcoming on NIO Day. Just to talk about individually about why all of these are important. So the new sedan is obviously important. It's giving NIO a presence in a new segment of the EV market. then the 150 kilowatt hour battery is really important, because this actually puts NIO ahead of Tesla in terms of the range available on the vehicles. So this 150 kilowatt hour battery could be an absolute game changer for NIO, and really important to them maintaining their market share against Tesla. And then of course autonomous driving. The importance of this just can't be too highly stated. It's almost an arms race amongst all of these EV cars to get to this automated driving, to get to that level 5 autonomy, and to get to being able to deploy those robo-taxi fleets. But all of this stuff is kind of future looking. It's important things to keep your eye out for at NIO Day and any future announcements, because these are all very important potential announcements for the company. One of the other key points as well to mention is the possible European expansion. So this is something that's been spoken a lot when it comes to NIO stock. There's been a lot of conversation about NIO expanding globally, possibly beginning in Europe. So you can see here on this article by Next Green Car, they say NIO's electric models are likely to be available in Europe next year. So according to industry sources, Chinese brand NIO is planning for a European launch in 2021, and then they talk about what we just mentioned. What is more, the company is rumored to also be developing a battery pack with a capacity of 150 kilowatt hours, which would enable an electric driving range of more than 550 miles. So the European expansion part is definitely very exciting. I'm not accounting for that when I do my valuations, because it's still speculation at this moment. We just don't know if and when it's happening. We need to obviously wait for announcements, and it might be something that comes out on NIO Day, so definitely something to keep an eye out on. But the European market is an exciting one, and if NIO is able to get into it, that could be absolutely huge for the company. It could be the difference between this being a stock which doubles or triples your money and being a stock which 10x's your money. We know that in Europe, countries like the United Kingdom are big push on getting rid of gasoline cars. They actually banned them by 2030, so all cars are expected to be clean energy vehicles in the country by 2030. So if NIO is able to get into markets like this, the potential for the company is absolutely huge. So definitely keep an eye out for that. See what happens on NIO Day. See if there is any announcements around it, this European expansion. But the last thing I want to have a look at before we actually get to that part of doing the valuation and revenue projections and price target projections for NIO is also the possible risk to NIO stock from Tesla. So we know that everything and NIO's revenue futures depends on the amount of market share they're able to get in China. Now the Model Y is potentially a threat to NIO developing market share in China. That's because Tesla has made a conscious effort to cut the price of their Model Y, and the price of that Model Y is now at 52,000 in terms of US dollars. NIO's cheapest car, on the other hand, is actually more expensive, 5,000 US dollars more expensive at 57,000 US dollars. However, at the moment in time, NIO is being helped by subsidies. But the problem with that is here, where you can see that China is actually expected to cut the subsidies on their EVs by 20% in 2021. So it's possible that all of this could possibly have an adverse effect on NIO sales. But I'm going to give you the case for why I don't think Tesla's Model Y cuts are going to have too much impact on NIO. So to begin with, you've got the fact that NIO is actually in a separate segment, I think, to Tesla. So we know that Tesla has this vision of being a mass market EV. It's almost like the Toyota or the Hyundai of the EV market, whereas NIO is really targeting that premium car segment. You're talking like the Mercedes and the Audis of the EV market. So they're targeting two different types of customers. So I don't expect the Model Y cuts to have too much impact on NIO, because they're just kind of targeting very different people. Another point to note is that NIO has something in their vehicles that Tesla can't offer or doesn't offer. So the Model Y doesn't have anything that helps soothe customers' range anxiety. NIO has its battery as a service, so all the vehicles that they have, the batteries are removable. You can pull them up to service stations and within 3 minutes get the battery swapped out and have a fully charged one, so you're ready to do what you need to do for the day. Now this really addresses the very real range anxiety in China. So Chinese customers are anxious about EVs because they don't want these cars to be cutting out on them, and they don't want to be stuck looking for a place to charge them in a country that doesn't have the best charging infrastructure at this moment in time. So Li Auto addresses this with their gasoline generator, and then NIO addresses this with their battery as a service. Tesla is actually the only one that isn't doing anything to address this range anxiety. So therefore, I don't expect Tesla's Model Y price cuts to have too much impact on the sales of NIO's vehicles. Having said all of that, it's just something that I can't predict with any certainty about what's going to happen. So What we need to do is keep an eye out on the next 2, 3, 4 quarters and basically see for ourselves and actually see the figures and results to kind of see whether this Tesla Model Y cuts are actually affecting NIO's market share. Is it causing NIO's market share to decline? Is it causing sales growth to decline? It's something that we really do have to wait and see. It's possible that it does, but in my opinion, I think because of all the things NIO has going for it, it's also very possible that it doesn't have any impact whatsoever. But just again, something for us to keep an eye on. So having looked at all of that, having looked at the delivery figures, having assessed what it actually means for the company and how it shows that really what it shows is that NIO is gaining market share, is growing its sales at a faster pace than the Chinese EV market. Having looked at the catalysts for the company which are upcoming, there's so many things which could be announced on NIO Day and could be announced at any moment that give new potential for this company. So a lot of things to be looking out for. Having looked at all of those things, the catalyst for the company, and also considered the potential risk that Tesla might pose to NIO developing its market share in China, the next thing we need to do is do our valuation and do our price projections for this company. So the way we're going to do this is I'm going to try and project the revenues for NIO in 2025, and then from those revenue projections try and get a price target for the company. But before we do get into all of that, I have to ask you guys, I haven't asked you so far in the video, I've got to ask you guys to please smash that like button, hit that subscribe button, join the family, come along and be a part of this foolish investing family. We try to do things a little bit differently on this channel in the sense that we're here trying to give long-term investing advice, and I try to actually differentiate this channel from other YouTube channels in that we actually try to do a fundamental analysis, we actually try to give you the bull thesis for why you might want to invest in a stock, and then I try to give you this tangible price targets to back it all up so you guys have something to work off, and if you agree with it you can say, okay, well, this is what the price target might be, so this is the price I'm willing to pay for the company, rather than just saying to you that this company is great and this company is going to go to the moon and just sharing snippets of news with you. I really am trying to bring you guys some real value. So if you guys do appreciate it and if it is bringing you value, then like I said, just let me know by smashing that like button, subscribing to the channel, and if you do subscribe, also just comment below and say I subscribed, and I'll try and get back to all of those comments and just leave you guys a personal message as a token of appreciation. So we've looked at what the figures were for 2020 and how NIO had a 3.36% market share. So what we need to do is say what kind of market share do we expect NIO to have in 2025. Now for this we're going to use a base case, a more bullish case, and also a more bearish case so we can kind of get a more rounded estimate. But for the base case, I'm saying that this company's done a brilliant job growing way faster than the EV market, doing a great job of claiming market share. If this company continues on that trajectory, I think it's entirely possible that this company is able to double its market share within the next 5 years and get to around a 7% market share. So that is our base case. And now what that gives us is potential revenues of around 15 billion. Now the way that we've got those revenues, if we've said the average price for NIO's cars are around 54,000. Now for full transparency, it was a little bit difficult for me to try and find out what the average price actually was. So the way that I've done it is I've taken the revenues that NIO actually made from car sales, so not anything else, just the money they made from actually selling the cars. And then I just divided that by the amount of cars they actually sold. So I got that the average price for their vehicles is around 54,000 US dollars. And that does seem to take into account the subsidies and price cuts and stuff that people are paying as well. So that gives us revenues of around 15 billion if they reach that 7% market share. Now what we need to do to get a target price is just apply a suitable price to sales ratio. So how many times it sales do we think the market will price this stock at in 2025? So at this moment in time, they're roughly priced at almost 30 times sales. And then if you look at Tesla, which I think is always good to look at an established competitor, then Tesla is currently priced at around 23 to 26 times its sales for 2020. Now I know that Tesla's price is that high at the moment because it ran up after the S&P inclusion. So to be more conservative, I don't want to go with that 23 and 26. I'm going to go with a more conservative 15 price to sales ratio. It's always good to be a little bit more conservative in the valuations. I have no problem with doing that because it just makes the estimates that little bit safer. So if they reach that 7% market share, get that 15 billion in revenue, and they're priced at 15 times their sales, we see that they'll have a target price of around $151. So for our base case, we can put here that NIO has a target price of $151, which means 23% compounded annual returns and 5-year returns of around 184%. So almost 3 times your money if you were to get in at this price of around $54. Now, I think it's important to also look at a bit more of a conservative estimate. So if we say, okay, this company doesn't double its market share, it struggles to actually grow its market share, it has competition from Li Auto, Tesla, BYD. So maybe it only really grows incrementally in that 5 years and reaches a 4% market share. In that case, we get revenues of around 9 billion. So if we just pop that in here, again, the same 15 price to sales ratio. That gives us a price target in a more bearish case of $86. Now, personally, that's not something I see happening. I don't think this company is only going to grow its market share by 0.4% in the next 5 years. I think this company is going to do well and is possibly going to really expand its market share. So we've looked at a bearish case, a base case, and then we can also have a look at a bit more of a bullish case. Say, this company does really well, this battery as a service really takes off, and people are loving NIO's cars. And we know people are loving NIO's cars because they actually have a referral rate of around 64%. So that means around 64% of people who own NIO cars are referring their friends to come along and buy NIO cars as well. So it seems like people really like these cars. So if we say in a more bullish case, this company reaches around an 11% market share by 2025. That gives us revenues of around 24 billion. And again, with that same 15 price to sales ratio, we get a more bullish price target of $238, which is 35% compounded annual returns, which is amazing. 347% returns altogether, so almost 5 times the investment. Now, having looked at all of these scenarios and making these assumptions, I do also want to kind of just do a gut check and have a look at what analysts project for revenues to see how far below or above that we are, just to kind of do a gut check to our own estimates. So you can see for 2025, analysts actually expect NIO to do around 17.27 billion. So that's actually roughly around somewhere in between where if we said if they had a 7% market share, there'd be 15 billion. And if they had an 11% market share, it's 24 billion. So that analyst projection of 17 is kind of somewhere in between that, closer to our base case of NIO having around a 7% market share. So therefore, I'd be comfortable in saying that in my estimations, my official price projection for NIO stock in 2025 is somewhere between that 151 to 238. There's definitely a lot of factors to be considered: how much market share, how fast they're able to grow, how well they stave off that competition from companies like Tesla. So this is definitely all things to keep an eye on, but that's why we've looked at 3 different scenarios. We've looked at one where they don't really grow their market share much, one where they're able to grow it to a decent 7%, and one where they're able to grow it to a very good 11%. And we can see analyst estimates fall somewhere between that 7 and 11% roughly. It seems like the estimates fall in at around 8 to 9% market share. So having looked at all of these, we get a range of around $151 to $238. But there are some things that I want to point out and make very clear before you guys take these targets. So the important thing to note is that all of these estimates are based on assumptions. I'm assuming the potential market shares for this company. That's the first assumption that I'm making. Now I'm trying to mitigate the fact that I'm making these assumptions by looking at more conservative, more neutral and more bullish targets, but at the end of the day they all are assumptions. So you guys have to have a look at that and see if you're happy with those assumptions, and if you want to tweak them, then feel free to do so and come out with your own revenue figures from there as well. The second assumption that we're making is this price to sales ratio. Now nobody can logically actually predict what the price to sales ratio will actually be. I'm just making these estimations based on where Tesla is at the moment and saying that based on that, Tesla's at like 26 price to sales ratio. So if I go a little bit more conservative, I get to 15. But again, that's my assumption. And just to show you guys how important assumptions are, you can see in the bullish case, we've got that $238 price target. But if we put that price to sales ratio down to 10, that price drops a lot to $158. So the assumptions that you put into these models are really, really important. So do bear that in mind and play around with it however you see fit. Maybe you think this company has a much higher price to sales ratio. Maybe you think it's much lower. But talking about the price to sales ratio leads me to one of the risks with investing in NIO. Now this risk applies to all Chinese stocks, EV stocks, and generally Chinese stocks. Now these stocks are very susceptible to news about what's happening in China. So recently we saw with Alibaba that stock plummeted around 20 to 30%, losing a hefty amount of its value. And that company is an absolute revenue growth beast, but it's currently only priced at 7 times its sales. It doesn't deserve to be trading at as low as 7 times its sales, but it is because of the news surrounding it. The fact that China seems to be going after this company for anti-competitive practices, but it shows how susceptible these companies are to the news. And that means that sometimes these Chinese companies that might be doing fabulous might not get the premium valuations that they deserve, and might not get the premium valuations that their US counterparts will. So while Tesla has a 23 times price to sales ratio, if something bad was to happen similar to Alibaba to NIO, it's possible that its price to sales ratio could plummet down to what Alibaba is today, which is like 7. You've got JD.com, which is almost lower actually than 2 price to sales ratio. All good companies who, if they were US companies, would have much higher price to sales ratio. So that's something to bear in mind. And the other thing to bear in mind as well is the delisting risk. So I mentioned this in the Li Auto video yesterday, but I'll just do it again briefly. The delisting risk is real, and until we get a firm resolution and a firm announcement that some kind of compromise has been made and that China is now going to allow their companies to submit to US accounting, auditing, then the risk remains. And if there's no resolution by year 1, year 2, as we get to year 3 of this whole 3-year time that companies have to comply, if nothing happens and these companies don't start to become compliant, it's possible that these stock prices could plummet if people start to get worried that these stocks are going to be delisted. So all of this is not to dampen your excitement for an investment in NIO. It's just to say that make sure when you do invest in any Chinese company, you do your risk management, and there's only a certain amount of your portfolio that you allocate to this, because these companies are very susceptible at the moment to swings because of the news. So just do bear that in mind. Do your risk management. I'm bullish on these Chinese EV companies. I'm not investing because of the issues that might be occurring with the delisting and the issues with the Chinese government. That's not stopping me from investing, but it means that you have to take a bit more of a cautious approach and keep, say for example, that only 10% of my portfolio will be in Chinese EV stocks, not 50% or 60%, because if something was to go wrong, you don't want to lose so much of your portfolio. So again guys, I don't want to dampen your excitement for NIO. It's just a risk that I wanted to mention so that you guys are aware and can manage your risk and your portfolios accordingly. With that all being said, we've gone through all of the delivery figures for NIO, which are extremely exciting. We've gone through all the potential developments that we might get on NIO Day, some of the potential catalysts for this company, and we've got these price projections based on the revenue that this company might generate by 2025. So we've got this more bearish case, this base case, and this bullish case. And as I said, I expect that NIO might be somewhere between this 151 and 238, so somewhere between our base and bull case. There's obviously a lot of factors, there's a lot of assumptions being made, but the future definitely looks bright for this company. But guys, that is a wrap for this video. I hope you guys found the video useful. I hope you found it helpful, and most importantly, I just hope that you guys took some kind of value from the video. If you did, then please let me know by smashing that like button, hitting the subscribe button, and joining our family. I'd love to see your guys' comments in the comments below, having a conversation. Let me know if you agree with my thoughts, or even if you disagree with them too. Do let me know in the comments below. As I said, you guys don't get charged for anything on this channel. There's no Patreons to pay for, no courses to pay for, and I really do try to differentiate the channel from a lot of the other stuff that's on YouTube. I'm more focused on the long-term investing, more focused on trying to give you guys the fundamentals of companies, trying to go through these valuations and show you how I get there so you can use them for yourselves if you decide that you want to. But until next time guys, take care, and I hope to speak to you all again soon.